That was a pretty boring day. We lost support on the upside trend on ES or SPX. Didn't quite fall back to gamma neutral. I think our low of the day was about 50 BPS down. We recovered from there slightly and stuck to the like 42, 45 level. Big call and put walls on either side of us going into tomorrow morning. We have jolts after market open. So this will probably stay pretty range bound throughout the night here on the long term ES trend. I don't think we're going to break either direction substantially, at least not yet. Dollar up quite a bit today, although it did fall back into the end of the day and is now back under 105. Yields up across the board. 10-year up at 4.32. I think the high for the day was around 4.35. So we're starting to see a lot of pressure on yields, not only from the dollar rising, but rate cut expectations, which I'll cover in a minute. Broad commodities broke out of their downtrend from the middle of last year, just a little bit to the upside on a 38-point gain today. Dollar and yields obviously up quite a lot. Correlation starting to turn around on the 1 month now, which we've been seeing the turnaround on the 3 month for several days now. So we're seeing a little bit of dispersion breakdown on the shorter dated positioning. That could be quite bearish. Carry trade getting leveraged up pretty hard. Credit spreads tightening. Forward yield of vol moving up. 10 2-year or 2 10-year widening out a bit. This is about the prior low the last two times too. Anyway, yeah, yield curve inversion. I'm moving up again. Move down. That's probably not correct. We'll probably see a bump and move when that prints. Skew on Friday dropped a little bit. It's like 82.7% of the S&P above its 20-day average. Opening this week, correlation has dropped substantially between cash VIX and VIX futures. That could be a big sign. Although today's just the first day, and vol tends to be a little higher at the beginning of the week, so that might moderate a bit as the week progresses. But that's a pretty substantial drop from last week's, or increase from last week's negative 36.67%. So we're seeing a little bit more correlation between those, but they're still negatively correlated. And we're pricing in, let's see, after today's 6-month auction, we're now pricing in 0.55 or 55 points of cuts for 2024. So we're very close to pricing in just 2 rate cuts right now. I doubt we're going to move too much lower than this before another FOMC meeting, but that's pretty significant. Can we see the Beyond liquidity tips? Yeah, sure. Yeah, liquidity's getting pretty tight on Beyond, but they still may be able to short it down a little bit before it starts moving up. Generally speaking, these periods kind of this back and forth where they're netting off liquidity, you tend to see a deeper drop, but that's usually followed by covering. So, I mean, you get a little bit of liquidity out of IWM because IWM's selling off, right? But that doesn't generate like a ton of liquidity in the underlying. It just makes it so that they don't have to short, or they don't have to cover into rising prices, right? Thank you guys so much. You guys all have a great night. Later.